Hello and welcome. You're watching To The Point. Mr. Modi's very successful trip to Canada, Germany and France is drawing to a close, but it's provoked an unusual question. Is he the best received Prime Minister abroad? Not only has President Obama written about him in Time magazine, but Stephen Harper broke protocol to accompany him to every city in Canada, whilst François Hollande organized a boat trip down the Seine. So has Mr. Modi been feted in a way no other Indian Prime Minister has ever been treated? Or is that just press romanticization and exaggeration? That's the debate in part one. But first, has the government's acceptance of a tribunal ruling requiring foreign institutional investors to pay retrospective minimum alternate tax breached the promise not to resort to retrospective taxation? And does it also amount to what some consider a return of tax terrorism? Finally, at a time when Mr. Modi is inviting investors to come to India and has promised a stable tax regime, does this undermine what he's saying and doing? That's our first discussion tonight. And joining me now to discuss whether the government's tax demands are undermining Mr. Modi's assurance to investors and the promise of Make in India is the Financial Times Mumbai correspondent James Crabtree, the senior tax partner of Pricewaterhouse India, Karan Thapar, former investment banker and investment expert P.N. Vijay, and the Revenue Secretary Shaktikant Das. James Crabtree, the Indian government has confirmed plans to issue tax demands against foreign institutional investors amounting to some possible 40,000 crore for not paying minimum alternate tax in previous years. Now, in articles that you've written in the Financial Times, you seem to suggest that many people view this both as a return of retrospective taxation as well as some form of tax terrorism. Explain to me, why is it viewed in this way?
Well, I think you have to see the context, Karan, which is that there have been a series of tax disputes between the Indian government and foreign businesses, famously involving the British company Vodafone, but there have been a series of others. And so the perception has built up internationally that the Indian tax system is quite aggressive and that sometimes it stretches the rules a little bit. And so the fact that you now have another example of this, I think people are quite wary of. Now, to be fair to the Indian government, they're simply following the rules in this case. This particular tax could apply to foreign investors, but the point is that it's been around for quite a long time, for 20 years. It's never been applied to these international investors before. And so people, I think, outside of India have just been rather surprised that suddenly, out of the blue, this big set of new tax demands that no one was really expecting has suddenly occurred. And that's what has spooked people outside India. It seems like it's part of a wider pattern.
Karan Thapar, James Crabtree, in one of his articles in the Financial Times, quotes a gentleman called Hugh Young, the managing director of Aberdeen, one of the largest investors in India. And this is what Hugh Young says. It certainly doesn't fill one with warm, cuddly feelings towards India. This must make India a less attractive place to invest. Do you agree with Hugh Young, Mr. Thapar?
Yeah, I think, Karan, one of the things that, of course, scares international investors is uncertainty. And if we just step back, while there is a ruling that the government has mentioned, and that is true, it's the Castleton ruling, equally, we must bear in mind that MAT on FIIs or MAT on foreign companies or MAT per se was introduced in 1996, and if you see the history of the legislation, including what we call the explanatory notes to the Finance Act, which basically explains the rationale for an amendment, it is very clear that it was supposed to apply to domestic companies. So while it is not retrospective in a sense, it's a new interpretation of a legislation that has been on the statute book from 1996, which is 19 years from today, 19 years before today. And from that point of view, uncertainty always scares investors, and definitely I don't think one can run away from the fact that this will have a dampening effect on international investors.
P. N. Vijay, on the other hand, and you heard James Crabtree say that, the government's decision to issue these tax demands to FIIs follows a ruling from the Authority for Advanced Rulings that foreign investors are liable to pay retrospective MAT. And you've heard Ketan Dalal point out this is not strictly retrospective, but it is a new interpretation of something that's been on the statute books. And as far as many investors are concerned, if you suddenly come up with a new interpretation of an old law, then that becomes effectively retrospective, even if the use of the word retrospective is wrong. Now, the government has made it clear this will not apply after 2015, but it will apply for earlier years. Where do you think the government has erred, or do you think the government was right? Was it right to go for a new interpretation, which many think now becomes retrospective, or has it erred in doing so?
Karan, frankly, I think the government's been doing its job in this particular case. I have to say that apart from being an investment banker practicing, I'm also a spokesperson of the BJP. To some extent, though we should differentiate government from party. Party is party and government is part of the party. But going on a professional basis, I heard the view that people want to have a snug feeling with the tax department. I think it's impossible to have a snug feeling even with the IRS. I have lived there. So
but what about the key point made by Mr. Dalal, that this is not strictly retrospective, but what it is a new interpretation of an old law. New interpretations of old laws sometimes look very unfair, particularly if those interpretations are then said to apply backwards in time.
Karan, I'm pained that the word retrospective should be used by foreign investors.
But I've just corrected it. It's now being seen as a new interpretation of an old law. So leave retrospective
that word has been going around in the media. I don't know why. Because you will recollect, the biggest problem the foreign investors had with India was that we were doing things retrospectively. You remember?
Mr. Vijay, pause a moment.
Now
Mr.
they
Vijay,
want us to
you're
do
not
something
answering my question. Please answer my question, because this is important. I want you here as an investment expert, not as a BJP spokesperson.
Sure.
The point I'm putting to you is this. Mr. Dalal says this is not technically retrospective. What it is a new interpretation of an old law. Now, when a law has been in existence for 19 years, and you suddenly interpret it differently to the way it's been interpreted previously, and then apply that interpretation backwards in time, it feels retrospective. And that's what I'm saying. Isn't that unfair?
That's half truth. That's not the whole truth. If you want me to be blunt about it, 115 JB came a long time back, as he said. In 2012, Chidambaram made some important changes to it. And after that, we had the ARR ruling. Don't forget, the foreign investors went to ARR. The government didn't go to ARR. And ARR is
so they brought the trouble on their heads.
They brought the trouble on the heads. And don't think ARR is a banana bench.
Okay.
It has got the power of the High Court.
You brought a very good point into the picture, which is this is a result of something that, in fact, foreign investors approached the tribunal to do. Shaktikant Das, you speak to us today as the Revenue Secretary of the Government of India. How do you explain what the government has done? In particular, I'd like you to address the feeling that James Crabtree says people have, that even if the word retrospective is wrong, this feels like a retrospective tax. And Mr. Dalal's claim that this is in fact a new interpretation of an old ruling, and if you suddenly reinterpret something that's been in existence for 19 years and then read that interpretation backwards into time, well, it feels very retrospective. So how do you explain the government's point of view on this?
See, the first thing I would like to say is that it's not a retrospective taxation. Let's be clear about that. It's not a retrospective taxation. The commitment which the finance minister made in July 2014 budget relating to retrospectivity, government is committed to that commitment and we stand by that commitment. This particular tax is not a retrospective taxation by any stretch of imagination or by any kind of interpretation. Now, this has been the law. Yes, a mention was made that this law was there for last so many years. Yes, if you look at section 115J, then you have JAJV. If you look at that relevant section of the Income Tax Act, it does not differentiate between a foreign company and a domestic company. It says an assessee being a corporate body. So therefore, the tax is liable on all corporate entities. So far as FIIs are concerned, who had a permanent establishment, PE in India, they were always liable to pay MAT. With regard to FIIs who did not have a PE, there was some kind of differing interpretation over a period of time. The interpretation was settled by the ruling given by the Authority of Advance Ruling, which is headed by a former judge of the Supreme Court, and it's a judicial pronouncement. In January last, this difficulty, the issue was brought to the notice of the government that the FIIs have certain difficulty in complying with this requirement of paying MAT. Taking into consideration their difficulty, the finance minister in the budget has provided exemption for the future. Naturally, when you give an exemption, it will be for the future.
But not for the last 5 years.
Or the issue, the tax liability relating to the past period has been isolated. When there is a judicial pronouncement, the answer to that is to go to the next higher judicial authority.
Okay.
In between, I mean, that is the way of going about it. When there is a judicial pronouncement, you go to the next higher judicial authority. The FIIs have not done it over the last 3 years. It's open to them. They can do it even now. It will be unrealistic and unfair to expect the government to make an executive intervention or to make a legislative intervention to sort of undo what a judicial ruling has done. The answer to a judicial ruling is to go to the next higher judicial authority.
Let me bring in the others to see how they respond to what you said. First of all, James Crabtree, the government's action against FIIs, which you and the people you've been talking to feel is unfair, happens at the same time as tax cases against Vodafone, Cairn Energy and Vedanta are continuing. And those already worry FDI investors. Now you have grounds to worry FII investors. So taken together, what message do you think this sends out to the outside world and in particular to Financial Times readers?
Well, just to be clear, Karan, I mean, I as a journalist have no view on whether this is unfair or not, but what I speak to foreign investors and certainly they feel that this is at least unexpected and many of them feel that this is unfair. I mean, I completely agree with the Revenue Secretary that the government's position, which is that the foreign investors have a right to appeal, and if they win that appeal, then that will be fine, and if they lose it, well, fair enough, then you have to pay. That is a perfectly defensible position. The consequence of that position, however, taking this sort of firm line, is that you are going to go through a perceptions problem, which is Prime Minister Modi has vowed to get rid of this problem of what the BJP itself in its manifesto called India's heritage of tax terrorism. This isn't a phrase that was sort of invented by foreigners. It was in the BJP manifesto. And the problem for the government is they have taken some steps that would be welcomed in creating a less adversarial tax system. But all of the good work that they're doing is then somehow undermined, or the perception is that it's undermined, because other tax problems suddenly emerge that nobody was expecting. And so the sort of thrust of this is that India wants to get rid of this image that its tax system is a problem, that it's too adversarial, but that as long as these cases keep running through the courts, it won't be able to lose it. It's not, this reputation is going to dog it for a long time to come.
Ketan Dalal, this problem has come to light almost at the same time as Mr. Modi has gone abroad. He's at this moment trying to encourage investors to come to India. He's promising them a stable tax regime. And many people feel that this problem in India seems to contradict what Mr. Modi is doing and saying abroad. Do you agree with that view, that this is somehow going to undermine Make in India rather than help and promote it?
Karan, as I mentioned, uncertainty and surprises always scare away investors. And let me just elaborate a couple of points which will then link into what you're saying. Which is let's look at things in perspective, and with great respect, we have the privilege of having the Revenue Secretary on this program. If you see the interpretation or the explanatory notes to the Finance Act, let me read out. It says the effective rate works out to 12% of book profit calculated under the Companies Act. Now, this was 1996, where the rate of tax was 40% and the MAT was based on 30% of that. It was different rates at that time. Now, that was the 40% tax rate was on Indian companies, not foreign companies. Similarly, in 2002, when they amended the law, this is the CBDT's own language, just hear this. The existing provisions of the said section provide for levy of tax, minimum tax on domestic companies of an amount equivalent to. The whole point is the intent and logic, Karan, of this whole thing was to hit at tax paying domestic companies which were declaring dividend absolutely clearly, number one. Number two, on that ruling, I may just point out again with great respect that after that there are 3 rulings of the tribunal, and one is an AAR ruling and one is a tribunal ruling. The AAR is, of course, obviously a very respected body, but so is the tribunal. And there are 3 rulings after that. One is in the case of ICICI Lombard, second is in the case of
what is all that
Society
amount
General
to?
and a couple of others, which have held that
Mr.
MAT
Dalal,
does not
what is
apply
the
to
main
foreign
point you're
companies at all.
making? What is the main point you're making? I don't want to get lost in detail. What's the main point
I'm making? The main point I'm making is that the intent, Karan, was never for MAT to apply on foreign companies at all, including FIIs, and therefore the amendment should have been clarificatory and applicable to all foreign companies, not just to FIIs, because if you don't do that, then even a foreign company deriving royalties from India and taxable at 10% otherwise would have to pay MAT at 20%. So its implications can be significantly more serious only than FIIs. That's the point.
Absolutely. And suddenly what's happened is that companies who had several rulings that made it clear to them and gave them comfort that this doesn't apply to them now find that it does apply to them. And that's the new interpretation that will take them by surprise. Even if it's not tantamount to a retrospective amendment, it will feel like one. Now, as the Revenue Secretary said, Mr. Vijay, each of the companies affected is free to go to a higher judicial authority and appeal. And I presume many of them will. Then therefore it follows that investors and investment will get tied up in a floodgate of litigation. Now that's not an outcome that is reassuring for investment. It's not an outcome that's going to encourage investment. It's not an outcome that's going to promote Make in India. So once again, this may be legal, it may be legitimate. But the outcome will be against India's interest, because you'll end up with a floodgate of litigation when in fact you want ease of investment coming in.
Karan, you know, this whole thing, I'm hearing this argument a lot. The argument is like this. You guys are in trouble. We are coming and investing, and we are bailing.
Well, we're asking them to come and invest. Hang on a moment, don't
we
get
are
it wrong.
asking everybody to invest.
Well, yes, Mr. Modi is doing it in particular.
Mr. Karan Thapar, please understand. In India, all cows are holy. Not only cows from New York, London or Mauritius.
But the point I'm asking,
we are asking every state government is calling people.
Mr. Vijay,
so let the foreigners not think that when there is an argument on P-notes, they come and say, we'll pull the carpet under you.
Mr. Vijay, that's not the question I asked you. The question I asked you was, we'll end up in litigation. Is that in our interest?
Don't they fear the IRS? Don't they fear Inland Revenue in UK? Don't they still invest in those 2 countries?
So the same will apply here.
In fact, foreign investors will feel happy if you are not a banana republic and succumb to media terrorism by the FII.
Media terrorism?
Yes, they go through the media. Why can't they go to the court of law? This is a technical matter.
All right.
This is a technical
Just
matter.
A moment.
Why can't they come to BJP and have an argument?
Let's not let any prejudice seep through your answers.
Not at all, Karan. Not at all, Karan.
Mr. Shaktikant Das,
I was against retrograde
tax. Let me bring in Mr. Das. Mr. Das, I accept your point, although Mr. Dalal has disputed it, that in fact this was originally never intended for FIIs. You say it was open to both. Mr. Dalal says there are several rulings that suggest it wasn't. The point is this, that the difference of interpretation between you and Mr. Dalal leaves ample room for litigation. Each of these FIIs who's affected will go to court. Investment and investors will get tied up in litigation. Now, just when you want investment, we're appealing for investment, is this the wrong thing to do? Would it not, in the wider interest of India, have been better for the government to say, sorry, we've got this advance ruling, but we think that in the bigger interest of India, it won't apply? Because it hasn't applied for so many years anyway.
You see, with regard to the applicability of this provision for the FIIs, it's a legal issue. I am not getting into the interpretation aspect of it. And the authority of advance ruling, headed by a former judge of the Supreme Court, I am sure has taken all these factors into consideration. Now, if the FIIs challenge it judicially, this is a legal point which the courts will decide. So I will not go into it. But I would like to focus on 2 issues. One is the litigation. You mentioned that are we sort of creating a situation where there will be increased litigation? Number 2, what impact it's likely to have on the investor sentiment? Now, with regard to the litigation, please take into consideration the number of measures which the government has taken over the last several months in the July 2014 budget and in the February 2015 budget. several provisions of the income tax law which had ambiguity of language, ambiguity of interpretation, they have been cleaned up. The whole provision relating to indirect transfers, where there was this famous retrospective case of Vodafone being talked about, the provision section 9(1) of the Income Tax Act which relates to indirect transfer, that provision has been completely cleaned up in the recent budget.
Sure.
The provisions relating to transfer pricing,
those
we
are
have
different
adopted the
provisions
best
to this.
international practices.
But Mr. Das, those are different
We have-
provisions to this. You
just
cleaned
give
up
me-
those,
just give me one
but
moment.
this still remains a problem for them.
Karan, I'm just coming to that. Karan, just bear with me for 1 minute. So please look at the efforts which have been taken, and also now the finance minister has announced that all exemptions will be eliminated in a phased manner. Take it from me, maximum number of litigation in our country relating to income tax arises out of exemptions. When the exemptions are phased out and eliminated in a phased manner, we are creating a situation where the litigation around tax laws in India will come down by almost 50% and will come down significantly. Now coming to the whole issue, the second issue of investor sentiment, I think the serious investors do understand the nuances of a particular situation. Like UK, we are also a parliamentary democracy. We welcome all investors, both domestic as well as foreign investors. It's our commitment to provide an enabling environment, which where there is tax certainty. It's not our intention to create any kind of uncertainty in the minds of any class of investors. This is a one-off kind of situation which has arisen, and the past problem has been completely isolated. The future investment of the FIIs are fully, there is full clarity, because in this budget the government has announced that there will be no match.
Mr. Das, I'm going to stop you there. You've given a very full answer. So which is
not going to affect, just a moment. So this is
very
something
quickly,
which
sir,
is
because we're running
not
out of
going
time.
to affect the investor sentiment in any manner, because a serious investor will take a comprehensive view of the situation.
But that's what you
And
say,
the
Mr.
ground
Das.
realities
I'm going to
today
go
are
to
far more
James
different
Crabtree
and
for
very,
the
very
last
receptive.
word on this, because many investors actually will decide how they view this issue in terms of how people like James and the Economic Times in India and the Financial Express in India, and more importantly the Economist abroad, report the matter. James, would journalists like you be extensively reassured by the lengthy explanation you've heard from Mr. Shaktikant Das, or will some of your concerns reflecting those concerns of investors continue? Give me the last word.
I think Mr. Das has a point in this particular sense, that India is having this fight from a position of strength now. The economy is good, the stock market is up, foreign investors want to put money into India. And so I think if they are going to have a fight, this is a good time to do it, because in a sense the desire of foreign investors to come to India may outweigh the uncertainty that they now feel because of this tax. Nonetheless, on the margin, this still doesn't help. And every time there is one of these tax rows, it makes it more difficult for India to lose this reputation that whether by accident or deliberately it's built up that this is a difficult place to do business with an unhelpful tax system. So I think the longer this row goes on, the longer it's still going to be more difficult for Mr. Modi to achieve this objective of making India a good place to do business.
Let's leave this particular one there. It's an interesting story, but it's clearly a story, the outcome of which entirely depends upon what view investors take. They will have a lot of reassurance from people like Mr. Shaktikant Das, but they also will be reading doubts reflected in the papers, as well as doubts reflected by people like Mr. Dalal. At the end, it depends upon how investors make up their own mind. My thanks to my guests for joining me.